Thank you very much. So hello everybody. I hope you have a great Monday so far. So we will now discuss the upcoming data release on the UK manufacturing PMI. Unfortunately, we won't have the fundamental part today, but just mentioning the average forecast for the January manufacturing PMI data. The average expectation stands at 51.6 points, which is down from possibly down from 51.9 points we have seen that in December. And considering the latest negative news and data flow from the UK and from abroad, let's say China, we also can expect that potentially the UK manufacturing sector will be hammered more, even more from these negative events abroad, and therefore we have the negative surprise trading strategy today for the technical part, and we have the cable, of course, for discussion, the most traded pounds currency pair. And even though at the moment almost 62% of all open positions are long, I would like you to pay attention to the pending orders because the majority of them, the vast majority, more than 70%, are set to sell the sterling versus the US dollar, and it means that traders are expecting the currency pair to decline in the foreseeable future. And by the way, concerning the expectations, I will just mention some more pessimistic estimates from financial institutions. And for instance, Citibank, Commerzbank, and Credit Suisse, they all expect the manufacturing PMI to decline down to 51.5 points, while Société Générale, the French bank, forecasts the PMI to decline down to 51.4 points. So they also go quite bearish on today's data released from the UK. Moving on to the current market situation, as you can see, the pair is at the moment trading just above the major level of 1.43, and in the last couple of minutes, in the last hour also, the pound has actually gained some value. Possibly it can be two reasons for that. It possibly can price in the upcoming data release, possibly expecting maybe some positive data, but it also can be some purchases before a negative data flow, and the pound will be expected to decline after the pessimistic numbers, in case they really are pessimistic. So we will see that. Speaking about the possible market reactions after the data is published, in some already 2.5 minutes from now, let's have a look at the previous market reactions for the cable. In the last 5 months, we have seen the average reaction of 26 pips for the cable for this particular data release, and the reactions ranged from 17 pips back in October and up to 47 pips back in November. And as you can see, both of those data releases used to have better than expected numbers, while in cases when we had worse than expected numbers in January, in December, and in September, the reactions of the cable were around 20 to 25 pips. So using that actually as a benchmark, so some 20-25 pip possible market reaction, we can project that the pound actually can decline down to the area of 1.427580 in case we have a really negative surprise from the data. At the same time, we cannot rule out any optimistic surprises. First of all, because of the weakness of the recent weakness of the pound, which is good for countries exporting industries. So it can also bring some surprise, some positive surprise. And in this case, the pound also can continue going to the upside, and the target levels will then be the area above 1.4320. So I have just 40 seconds to go. until the data will be finally released, and hopefully it will be published in the chat section. So let's have a look at the technical indicators for the cable. The 30-minute one indicators, they are pointing sideways right now, so they are quite unclear, quite unsure about the upcoming data release. But nonetheless, as I have already mentioned, the orders for the cable are quite pessimistic right now. So let's wait for the numbers. We just have some 10 seconds to go until the data will be finally published, and we will have the numbers and hopefully the first initial market reaction, which, as we can see, is quite positive right now. So yes, actually the numbers came out better than expected at 52.9 points in January, which is a positive surprise because everyone, on average, the analysts surveyed, they have expected the gauge to decline down to 51.6 points. And by the way, the December number was also revised slightly to the upside up to 52.1, which is actually a positive surprise for the UK, especially considering those negative events around the UK, in the Eurozone, and in particular in China, which is also quite an important trading partner of Britain. So that's really a positive surprise today, but possibly it can be explained by the recent weakness of the pound. So in the recent months, it has declined quite significantly, and it definitely helps the exporting companies of Britain, which can have some uplifted sentiment at the moment. And speaking about the initial reaction, it was of course the one to the upside in the first minute of trade after the data, but less than expected, smaller than expected market reaction of just some 12-13 pips to the upside for the sterling against the dollar, and at the moment we also see some selling off a bit, so a bit of a bounce back from this particular currency pair. Okay, I guess that for the technical part and for this data release, that will be all from my side. Thank you very much for your attention. We will see each other in some just 3 hours or 2.5 hours from now, when we have the daily research webinar, of course, at 12 p.m. GMT. So see you soon. Bye-bye.